Hi guys, this is Lee with the Market Sense. The week is June 9th, 2020. The charts in this presentation are provided to us by Gettess and come from the Trade Navigator software. And our normal weekly bond market chart here finally shows something out of this big long sideways pattern. We had a nice breakdown last week, probably broke a full 5 points below the lows we were looking at. But then this created what we like to call an exhaustion bar. It happens when the selling gets so intense that you basically just kind of run out of sellers, and they tend to rally back at least to a certain degree. And in this case, we kind of thought the Fed might come in and buy them if they started breaking too hard, since the Fed doesn't want interest rates to go up. So they have rallied back up. We were looking possibly at support in the 169.14 area. You can see they've come nowhere near that. And instead, they've turned back up and gone to the likely target we were expecting after the exhaustion bar, which is roughly 174.18. They've already done that. Now, that doesn't mean they can't go further. This next target here, 176.22, certainly makes sense because that would put them right back into the bottoms of the congestion area. But they don't have to. They've already done the important stuff, if you will. I'm afraid what they do from here is largely dependent on what they hear from Fed Chairman Powell Wednesday afternoon. Uh, he wants interest rates low, so I'm not sure what he can say, but that's probably what they're going to react to next if they react. If they're going to go up here, it'll be based on something he says, I believe. Stocks also have got plenty of movement after we were a little concerned about this pop-up last week and knew they could do it again. They certainly did. Um, they've come to an area now where we've gotten over the fact that COVID might knock us all off. We think that's okay now. And so now it's just a matter of what the economy does as we reopen. And the market has convinced himself that the economy's good, they'll rally. And if the economy's not good, then the Fed will come in and support them, so they'll rally. I think that's a dangerous situation, but that seems to be the mode we're in here. With the two big bars up like this and the extreme closes, the most likely thing for them to do this week is consolidate. We've got resistance up, it's actually above 3260 here. And the highest support we can find is about 3084, I believe, 84, 85. The greatest likelihood then is for them to remain between those two things. Doesn't mean they have to trade either of them either. Just consolidation would be the most likely story. They, of course, have to see what the Fed chairman has to say Wednesday also. And if you notice, I keep saying what he has to say. I don't expect him to do anything. I don't think anybody expects him to do anything. So if there was going to be a big shock to the financial markets, it would be because he did do something. Don't expect that. Just waiting to see what he has to say. And I think what he says will probably be supportive. So I don't think we'll see any turn down. If this is going to make a move out of there, it'll probably be to continue to go up and maybe test the highs again, or at least get close. But I'm not predicting that. It all depends on what happens Wednesday afternoon. And that's what I expect. What they do before then is probably immaterial. It's going to be the reaction to both the Fed's statement after the FOMC meeting adjourns and whatever happens in the question and answer at the Powell press conference afterwards. You never know what might come out of that. So that's what we've got for you today. I hope you can find something profitable